Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is the mini S&P 500 futures contract on this Wednesday, the 18th, the day after tax day of April 2017. What we had mentioned in our last video was this monstrous level of support resistance here from 2700 to basically 2730, and as you can see, we're right up tipping our toe in that 2715 mark. Now what would happen is traditionally if you had two closes, which we're going to get today, actually two higher closes about 3:05 p.m. in the afternoon, above these key intermediate term measures of trend following support resistance, that would suggest a bullish bias on an intermediate term, and ordinarily we would go bullish. Having said that, this is a monstrous level of support resistance, so unless we get above 2750 and then get a retracement, we're going to hold intermediate term unofficially bearish on this market. In other words, not confirmed. Now officially, as we mentioned, we are in fact bullish, having gone bullish on our official market timing on the 3rd of April at 25.85. So it's been an impressive move to say the least, but we could be getting some errant moves to be sure. Now actually here's this was the MADSC, the disc yesterday, putting in a nice $810 gain. Beautiful trade setups, went long right there, added another contract right down here, and of course closed for $810 worth of profit. But back to the market. So yeah, until we get actual confirmation above, not just looking at this trend, but of a horizontal nature and confirmation, we're going to hold our disk exposure and any disk trades on the short side or long side until we can get confirmation this is either going to hold as resistance or going to hold as support. So right now, even though we're above all key measures of trend following significance, we're really just on an unofficial basis. Officially the market bias is bullish on the firm, but unofficially, discretionarily, in kind of a neutral zone. We'll look at kind of the smart money in a second, kind of an interesting article out today about the smart money index. But right now, so let's look at where we're at. Got a few systems still long. The Boost actually went long again yesterday, so it's got a nice $1,580 in profit on that contract. It's actually went long a few days prior to that. $3,500 in profit on that contract and $6,570. Now, of course, this is a very aggressive portfolio. It did have some recent downturns, as we mentioned, but you think, oh, wow, that's a lot of losses. I don't think I want to trade that. But, of course, when you go look at this, you can see $472,000 on just $38,000 in drawdowns. Yeah, that's pretty impressive over the last 10 years or so. And, of course, you want to take advantage of any kind of drawdown. Dip, green, dip, green, dip, green, 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 dip, 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 dip. Here's another dip, and we're getting some more green. If we actually look at the detail, you can see, well, we won't worry about that. So, zoom in on that. So that's the Boost, and as you can see, sitting on some nice gains. What else do we have here? HW sitting on $10,000 in gains. We can move that up a little bit right there. Dotted line means it has not been closed in the exposure. The exposure with the solid lines means the money has been booked. And if we go back to look at the trade manager, we can see that the SP System 1.0, beautiful, $3,562.50 gain. Right there, as you can see, we'll update that as well to $3,500. Beautiful entry right there. Again, we can't talk about this enough. We did in the last video, just absolutely beautiful system. S&P 1.0, this literally started in 2003, so maybe 2002. So that's kind of an update on the exposure. The disk, we can actually take a look at that, I guess, right. 1 second, we can move over right here. So that's the disc right now, updated with the $800 in gains yesterday. We're now sitting at 59%. Went ahead and updated this track record to include fees, $2,497 per year. Essentially, it's been such an amazing month since the launch of the DSC that it's actually more than paid for the fees for the entire year, $24.97 for the year. Sitting on 12,214.50 in hypothetical trades, but real time and live. And of course, past performance is not necessarily indicative of future results. So that's a little update on the DSC. We actually wanted to take a look at, we mentioned the SMI a minute ago. So let's look at the smart money index, and as you can see, the smart money is definitely in line with, again, although we're officially bullish, we have to follow our methodologies discretionarily, and the MADSC is definitely looking for some shorting opportunities. But again, we're going to look for confirmation on a move back below $2,700 in the index, probably a couple of closes, maybe a couple lower closes, depending on the intraday or depending on the dynamics. Speaking of which. So if we go over here and we go back, we can look at the, so we looked at the daily, the intraday dynamics today, bullish, 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 little mixed today, not particularly mixed on Monday, but definitely a quiet day on Wednesday. I think the buyers have definitely exhausted themselves on this errant, likely bull trap, but we'll see what happens. But definitely we've had 3 days of straight bullishness. Kind of a moderate higher close today, so the dynamics are definitely suggesting that you can't really sell the market just yet, which again is why we have not sold the MADSC. Now, having said that, the MADSC does include the swing trades, so it does include swing trades. In fact, but we actually have an MADSC DT. So if you're interested in just holding exposure during the day, no overnight risk. So look at the track record of the MADSC DT, and what's interesting about the MADSC DT is if you look right here, here's a track record of how it performed last year. Now these are actual trades. This was on an $8,700 account, started at $8,700 in let's see, January, started $8,700 TradeStation, and finished the year with a gain of about $5,400 in gains for the year for this. So these are actual trades. But again, there's really not much difference. There is some difference, not much difference. This is the equity curve for 2017. Just thought we would throw this up there. And if you look, if you actually take net of fees, so these are the actual performances each month. And this was the actual equity curve. These are actual returns. 62% for the year on that $8,700 account. You can trade this with 10 grand. Gives you a 62% return. Now, if you back out fees, which you have to, $9.97 is what this is being offered on special per year. So if you want to do $9.97, go ahead and get your fees out of the way. You're up literally 50% last year in 2017 actual performance at net of fees. Now, of course, what was the drawdown though? What kind of risk do you have to endure to get an amazing 50% return on your $8,700? Well, the risk, the maximum drawdown, has been about 6%. If you look here, there was 6% drawdown, then it made 15%, 21%. No other actually consecutive back-to-back losses other than that 6% drop. So that gives you a reward to risk return ratio of 8.4 to 1, which, you know, obviously if you're looking at drawdown at 6%, you're going to be super happy with like a 20% return, much less a 50% return, literally making 50% on your money. So if you go to the website, so we looked at the market, we did some portfolio updates. If we go to the website, should be right there. Nope, that's not it. Maybe it's right here. Yeah, here we go. So you can do the MADSC DT for $9.97 a year, and that, of course, is the actual track record of that. Of course, this can be auto-traded with, we work with many brokers, probably work with yours, or you can have these trades delivered via email or to your texted to your phone. So that's kind of, I think that's all we've got to cover today. I hope you guys are having a great trading day. I hope this helps you understand the markets a little better, gives you a little bit more insight into what the underlying market is doing. And if we look at the here, yeah, there's a massive level of support resistance right here that a lot of people aren't seeing. A lot of people don't know about the 2700 to 2730 level, or 27 to 25. They're thinking, oh my gosh, we're getting 2 consecutive higher closes above every key measure of trend following significance. Let's go ahead and buy, and that may happen, but for us, it's not really going to happen yet. Anyway, hope that helps you understand the market. Hope you guys have a great trading day, and we will see you next time.